Welcome to the session on preparation of business plan. Let me introduce you to the topic. Friends, for any work, planning is very important. Planning is a process of determining future course of action of business. If planning is good, you are half succeed in your work. Essential elements to business success are identification of goals and development of strategies to meet those goals. A business plan is a written description of business future, a document that tells what you plan to do and how you plan to do it, and description of business strategy. It is a written plan, a document, and effective tool used by business. Friends, this session will focus upon the meaning of a business plan, benefits and elements of business plan. The session will also give you an idea about writing business plan and its presentation. The objectives of the sessions are to make you understand the meaning of business plan, to give you an idea about importance and benefits of business plan, to make you aware of the elements and process of business plan, to give you idea of business plan and its presentation, and to make you understand overall requirements of preparation of business plan. Let us start with understanding meaning of business plan. Friends, many times we see that many businesses fail and business owners see their dreams getting shattered. One important reason of business owners' failure is the planning before they start operations. If you want to succeed in business, you need to plan well. Planning plays very important role in determining the degree of success realized by a new or small business. Essential elements to business success are identification of goals, followed by development of strategies to meet those goals. Business plan is a written document of what you hope to accomplish by being in business and how you intend to organize your resources to meet your goals. It is a roadmap of the business and gives a base for operating any business and measuring the progress along the way. In fact, it is a blueprint for building a business on solid grounds and making sure that it will withstand the difficult years through its existence. Let's understand importance of business plan. Friends, too often people tend or err or crash into a venture because they get excited about the idea, but they don't take the time to evaluate the worthiness of the venture. This usually happens because people are so excited about idea that careful considerations of all the components of the venture are overlooked. A business plan is very important because it gives answers to different questions, which includes what business am I in? What will I sell? Who will be buyers of my products? Who would be suppliers? Who would be competitors for my business? What will be my promotional strategy? How much money will be needed for my firm? And how will I get work done? Who would be my employees? What would be my financial strategy? How would I bring funds and allocate funds? What would be the estimated profit of the company? Where and how business would grow in future? Where can I go for help? And other related questions. Thus, business plan is an effective tool. It takes time and energy to draw satisfactory business plan. However, it is essential to prepare the business plan irrespective of the size of the proposed business. Friends, let's understand benefits of business plan. A business plan is an effective tool used by businesses to organize the goals and objectives into a coherent format. No matter the size or stage of development, companies use business plans to improve internal operations and to describe and market the business to potential outside financiers. Business plan should not only reflect the individuality for the business but should also follow a standard format. It takes time and energy to draw up a satisfactory business plan. However, it is essential to prepare business plan even the business is small. The primary benefits of developing business plan includes it serves as a tool for internal use to track the progress of the firm. It helps in seeking capital for external use. It compels entrepreneurs to be clear in business. It allows entrepreneurs to assess the situation whether the business is developing as desired or changes are required because of deviations from the set plan. It helps financial institutions to decide whether the business is worth their backing. It is a base for decision making and future progress of the organization. Other benefits includes it helps in reducing an emotional bias. It provides SWOT analysis. It tests one's commitment. It helps one to justify plans or ideas. It helps in convincing others about the idea. Thus, we can say that business plan is a very important document which provides firm's objectives and a time frame for attaining its entrepreneurial goals. Friends, now let us try to understand and see elements of the business plan. The elements of business plan includes summary, introduction to the business plan. It divided into different phases. Phase 1 includes data collection and analysis. So, the first in that is general description of the industry, description of the firm, description of the product or services, market area, size and characteristics, customers base, competition. Phase 2 involves strategy formulation, which involves overall marketing strategy of the firm, location, advertising and promotional strategy, pricing method, methods of selling and distribution, sales and credit terms, other marketing and strategy elements, description of premises and facilities, production methods and equipment, materials and sources of supply, key personnel, competition and ownership, staffing plan, supporting professional services, management assistance and staff training, long range plans, critical risk and assumptions. Phase 3 involves forecasting results. Entrepreneur need to forecast estimated market share, sales forecast, determining cash requirements, has to prepare pro forma profit and loss statement. Entrepreneur needs to prepare pro forma balance sheet, break-even analysis. Explanation of projections is also required. He needs to do ratio analysis and other analysis. Friends, business plan preparation is very important. Let us now understand the business plan preparation blueprint to success. Business plan is a written document describing the nature of the business, the sales and marketing strategy, and the financial background. It also contains a projected profit and loss statement. It is a roadmap that provides directions so a business can plan its future and helps it avoid bumps in the road. The time you spend making your business plan thorough and accurate and keeping it up to date is an investment that pays big dividends in the long term. A well researched and designed business plan can best be likened to a blueprint for the construction of building, as it portrays the venture and details of all the elements necessary to get it going. Friends, a solid plan contains components enabling it to be used as a loan seeking package detailing the financing ideas and payback probabilities of the venture. For larger venture, plans are often written separately with specific purposes. Some plans are made for the use of bankers, while separate plans are prepared for the entrepreneurial of prospective stakeholders. Friends, all the business plans must take into careful considerations the various government policy requirements varying from municipal bylaws for zoning to the methods of soliciting finance. A great frustration results from a sudden and untimely encounter with a rule or regulation which was not considered before. An entrepreneur has to be very careful to investigate the regulations for security transactions or seek legal advice before soliciting investor for the venture. Let us now understand the business plan with number of steps. The number of steps in business plans varies according to the ways in which experts or entrepreneurs wish to categorize the major components of the planning process. The elements of a business plan involves number 1, title page and contents. A business plan should be presented in a binder with a cover listing the name of the business enterprise, the names of the principal persons, address, phone number, email and website addresses and the date. You don't have to spend a lot of money on a fancy binder or cover. Your readers want a plan that looks professional, is easy to read and is well put together. Include the same information on the title page. If you have a logo, you can use it too. A table of contents follows the executive summary or statement of purpose so that readers can quickly find the information or financial data they need. Next is executive summary. The executive summary or statement of purpose succinctly encapsulates your reason for writing the business plan. It tells the reader what you want and why. Right up front. Are you looking for a 10 crore loan to remodel and refurbish your factory? A loan of, for example, 25 crore to expand your product line or buy new equipment? How will you repay your loan and over what term? Would you like to find a partner to whom you would sell, say, 25% of the business? What is in it for him or her? The questions that pertain to your situation should be addressed here clearly and succinctly. The summary or statement should be no more than half a page in length and should touch on the important key elements, which includes business concept that will describe the business, its products, the market it serves and the business competitive advantage. Secondly, it will involve financial features which will include financial highlights such as sales and profits. Thirdly, financial requirements which will state how much capital is needed for startup or expansion, how it will be used and what collateral is available. Fourthly, It will look into the current business position. It will furnish relevant information about the company, its legal form of operation, when it was founded, the principal owners and key personnel. And fifth, the major achievements points out anything noteworthy such as patents, prototypes, important contracts regarding product development or results from test marketing that have been conducted. Next, that is important to include in business plan is a description of business. The business description usually begins with a short explanation of the industry. When describing the industry, discuss what's going on now as well as the outlook for the future. Do the necessary research so you can provide information on all the various markets within the industry, including references to new products or developments that could benefit or hinder your business. Base your observations on reliable data and be sure to footnote and cite your sources of information when necessary. Friends, remember that bankers and investors want to know hard facts. They won't risk money on the assumptions or conjecture. When describing your business, say which sector it falls into. For example, wholesale, retail, food service, manufacturing, hospitality, and so on. And whether the business is new or established. Then say whether the business is a sole proprietorship, partnership, or corporation. Next, it is important to list the business principles and state what they bring to the business. Next is a description of the product or service. The business description can be a few paragraphs to a few pages in length, depending on the complexity of your plan. If your plan is not too complicated, keep your business description short, describing the industry in one paragraph, the product in another, and the business and its success factors in 2 or 3 more paragraphs. When you describe your product or service, make sure your reader has a clear idea of what you are talking about. Explain how people use your product or service and talk about what makes your product or service different from others available in the market. Be specific about what sets your business apart from those of your competitors. Then explain why and how your business will gain a competitive edge and why your business will be profitable. Friends, you need to describe the factors you think will make it successful. If your business plan will be used as a financing proposal, explain importantly why the additional equity or debt will make your business more profitable. Next is a market analysis. A thorough market analysis will help you define your prospects as well as help you establish pricing, distribution, and promotional strategies that will allow your company to be successful versus your competition, both in the short and long term. Begin your market analysis by defining the market in terms of size, demographics, structure, growth prospects, trends, and sales potential. Next, determine how often your product or service will be purchased by your target market. Then figure out the potential annual purchase. Also figure out what percentage of this annual sum you either have or can attain. Keep in mind that no one gets 100% market share and that something as small as 25% is also considered a dominant market share. Your market share will be a benchmark that tells you how well you are doing in the light of your market planning projections. Friends, you will also have to describe your positioning strategy. How would you differentiate your product or service from that of your competitors? And then determine which market niche to fill is called positioning. Positioning will help establish your product or service's identity within the eyes of the purchaser. A positioning statement for a business plan doesn't have to be long or elaborate, but it needs to point out who your target market is, how you will reach them, what they are really buying from you, who your competitors are, and what your USP is. How you price your product or service is perhaps your most important marketing decision. It is also one of the most difficult to make for most small business owners because there are no instant formulas. Friends, many methods of establishing prices are available to you, but these are among the most common. First is cost plus pricing, which is used mainly by manufacturers to assure that all costs, both fixed and variable, are covered and the desired profit percentage is attained. Second is demand pricing, which is used by companies that sell their products through a variety of sources at differing prices based on demand. Third is competitive pricing. It is used by companies that are entering a market where there is already an established price and it's difficult to differentiate one product from another. And the fourth is markup pricing. It is used mainly by retailers and is calculated by adding your desired profit to the cost of the product. Friends, you will also have to determine distribution, which includes the entire process of moving the product from the factory to the end user. Make sure to analyze your competitors' distribution channels before deciding whether to use the same type of channel or an alternative that may provide you with a strategic advantage. Finally, your promotion strategy should include all the ways you communicate with your markets to make them aware of your products or services. Friends, to be successful, your promotion strategy should address advertising, packaging, public relations, sales promotions, and personal sales. The next important that you need to do is competitive analysis. Friends, the purpose of competitive analysis is to determine the strengths and weaknesses of the competitors within your market. Strategies that will provide you with a distinct advantage. Barriers that can be developed to prevent competition from entering your market. And any weaknesses that can be exploited in the product development cycle. The first step in a competitive analysis is to identify both direct and indirect competition for your business, both now and in future. Friends, once you have grouped your competitors, start analyzing their marketing strategies and identifying their vulnerable areas by examining their strengths and weaknesses. This will help you determine your distinct competitive advantage. Whoever reads your business plan should be very clear on who your target market is, what your market niche is, exactly how will you stand apart from your competitors, and why you will be successful doing so. Next is operations and management. Friends, operations and management component of your plan is designed to describe how the business functions on a continuing basis. The operations plan highlights the logistics of the organization, such as the responsibilities of the management team, the tasks assigned to each division within the company, and capital and expense requirements related to operations of the business. Next is financial components of your business plan. Friends, after defining the product, market and operations, the next area to turn your attention to includes financial statements that form the backbone of your business plan. The three statements include the income statement, cash flow statement and balance sheet. The income statement is a simple and straightforward report on the business cash generating ability. It is a scorecard on the financial performance of your business that reflects when sales are made and when expenses are incurred. It draws information from the various financial models developed earlier, such as revenue, expenses, capital in the form of depreciation, and cost of goods sold. By combining these elements, the income statement illustrates just how much your company makes or losses during the year by subtracting cost of goods sold and expenses from revenue to arrive at a net result, which is either a profit or loss. In addition to the income statement, include a note analyzing the results. The analysis should be very short, emphasizing the key points of the income statement. Friends, the cash flow statement is one of the most critical information tools for your business, since it shows how much cash you will need to meet obligations, when you will require it, and where it will come from. The result is the profit or loss at the end of each month and year. The cash flow statement carries both profits and losses over to the next month to also show the cumulative amount. Running a loss on your cash flow statement is a major red flag that indicates not having enough cash to meet expenses, something that demands immediate attention and action. The cash flow statement should be prepared on a monthly basis during the first year, and then on quarterly basis for the second year, and annually for the third year. It is advisable, but it depends upon the entrepreneur. As with the income statement, you will need to analyze the cash flow statement in a short summary in the business plan. Once again, the analysis does not have to be long and should cover highlights only. Friends, the last financial statement you will need is balance sheet. Unlike the previous financial statements, the balance sheet is generally annually prepared for the business plan and is more or less a summary of all the preceding financial information broken down in different areas: assets, liability and equity. Balance sheets are used to calculate the net worth of a business or individual by measuring assets against liabilities. If your business plan is for an existing business, the balance sheet from your last reporting period should be included. But if the business plan is for a new business, try to project what your assets and liabilities will be over the course of the business plan to determine what equity you may accumulate in the business. To obtain financing for a new business, you will need to include a personal financial statement or balance sheet also. In the business plan, you will need to create an analysis for the balance sheet, just as you need to do for the income and cash flow statements. The analysis of the balance sheet should be kept in short and must cover all key points. Next is supporting documents. In this section, include any other documents that are of interest to your reader, such as your resume, contracts with suppliers, customers or clients if any, letters of references, letters of intent, copy of your lease if any, and any other legal documents, tax returns for the previous 3 years, and anything else relevant to your business plan. Some people think you don't need a business plan unless you are trying to borrow money. Of course, it's true that you do need a good plan if you intend to approach a lender, whether a banker, a venture capitalist, or any number of other sources for startup capital. But a business plan is more than a pitch for financing. It's a guide to help you define and meet your business goals. A business plan won't automatically make you a success, but it will definitely help you to avoid some common causes of business failure, such as undercapitalization or lack of an adequate market, and so on. Friends, now let us try to understand business plans and a detailed project report. Once an entrepreneur has made a tentative decision of exploiting a specific opportunity, he or she will be advised to prepare a DPR, that is Detailed Project Report. A thoughtful prepared report is an important tool as it helps the entrepreneur in anticipating and solving problems. It has been experienced that while preparing a detailed project report, the entrepreneur is compelled to consider several financial and implementation problems well in advance. The next session will talk on exercise on preparation of project report, which will be very important tool for you. Friends, let me conclude the session. We have seen that a business plan is an effective tool used by businesses to organize the goals and objectives into a coherent format. No matter the size or stage of development, companies use business plans to improve internal operations and to describe and market the business to potential outside financiers. We have seen that business plan is very important for a firm, and preparation of business plan starts with a business idea, followed by business objectives and strategies, budget, and ends with business plan. The session has gave you an idea of elements, process, benefits, and importantly preparation process of business plan. Hope by now you have clear idea that business plan is a blueprint to succeed in business. In our next session, we will discuss on exercise on writing project report, which will also give you an idea about DPR, that is Detailed Project Report. Hope you liked the session and learned about